In this video, I want to speak about Euro USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. We will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just tested a very strong monthly demand and support area and rejected it to the upside multiple times. Starting from here, we had the first rejection, again here, again here, again here, and at the moment, just last month, we had the last test of this support, and the market has at the moment already started rejecting the level to the upside. So more bullish price action could be expected away from this zone. Dropping down the weekly, we can see how from a weekly perspective, the market is currently testing the previous weekly high. From here, the previous the previous move to the downside and this bear move was created. And at the moment, the market is testing exactly the same zone. So some resistance could be found at this level. However, it is also important to keep in mind that if we do get a break above this level, more bullish price action could be expected for a clear break above the zone. Dropping down on the daily, we can see how from a daily perspective, we actually currently have a market which is bounded in between resistance and support. We know that the high is here, and we know at the same time that the low is currently here, which is still acting as support. The market has only once tested this level. However, we can see how this previous low has now once again acted as support. Now, until the market will remain in between this daily support and resistance from a daily perspective, we do not have anything interesting. However, things would become very interesting if we actually get a successful break above this resistance, because at that point, since we know that the monthly and weekly already look quite bullish, at that point also on the daily time frame, we would have bullish structure as this daily previous resistance would become support here. So we don't know if we will get this break, but if we do get the break, after the break on the retest of this previous resistance turn support, how we could be approaching a potential rejection to the upside. So we don't know if the market will manage to successfully break above this resistance, but if we do get the break on the retest of this previous resistance turn support, how we could be approaching a potential rejection to the upside. Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.